Good afternoon, ladies and gentlemen. Welcome to Energy Development Corporation's earnings call on its first half 2016 financial and operating results. I will now turn over the floor to Mr. Boy Riccio, Head of Investor Relations. Please go ahead.
Good afternoon, everyone, and welcome to EDC's conference call to discuss its first half 2016 financial and operating results. As a reminder, this financial operating results presentation will be posted in the Investor Relations page of the company website shortly. We have likewise subscribed to a playback of this call from our service provider, PGI. The corresponding passcodes will be made available only upon request by all concerned from EDC Investor Relations. Before handing the floor over to the next speaker, I would like to remind everyone that comments made for the call's duration may include forward-looking statements that are based on current expectations and as such are subject to a variety of risks and uncertainties that could cause actual results to differ materially from current expectations. Participating in today's call are the following: Mr. Nestor Vasay, our CFO, Mr. Erwin Abante, Vice President for Corporate Finance, Irene Itoses, Head for Central Maintenance under OEG, Ms. Maribel Manlapas, AVP Controller, and Mr. Carlo Vega, AVP for Legal, Regulatory, and Business Development. I will now turn over the floor to Mr. Vasay for a brief introduction.
Good afternoon, everyone. There were four major factors that influenced the company's financial results for the first half of 2016. First is the higher revenue contribution amounting to 230 million. This is brought about by higher sales of our Palimpinong Tongonan Power Plant, the FG Hydro, and Burgos Wind. Second is the reduction in operating expenses brought about by the deferment to 2016 of the implementation of less critical projects. This resulted to a lower expenditure for parts and supplies. The third is a lower insurance proceeds. For the first half of 2016, insurance proceeds amounted to 290 million versus 750 million for the same period last year. And last is in connection with the arbitration proceedings between EDC's wholly owned subsidiary, Bachmann Geothermal Inc., and its contractor, Weir Engineering Services Limited. EDC received proceeds from Weir on contract for works, completion of works on steam turbine and generator of units 1, 2, and 3 with a net amount of 121 million and reimbursement of legal fees with a net amount of 33 million pesos. I will now turn over the microphone to Erwin to discuss the financial results in detail.
Thank you, Nestor. I'm on slide 6, and it shows a summary of our financial performance for the first 6 months of the year. I'll just run this through very quickly, as I will have a separate discussion on the major drivers in the succeeding slides. Consolidated revenues increased by about 230 million, together with a 10% or 939 million increase in EBITDA for the first half of the year, mainly due to lower operating expenses. Net income stood at about 5.2 billion for the first half of the year, up by about 8% from about 4.8 billion of the same period last year. Consolidated recurring net income attributable to equity holders of the parents stood at about 4.7 billion in the first 6 months of 2016, marginally higher by about 26 million from the same period last year. On slide 7, zeroing on the consolidated revenues, it increased by about 1.4% from about 16.8 billion in the first half of 2015 to about 17 billion in the first half of 2016. Mainly due to the following. First is the increase in sales volume from FG Hydro and Burgos Wind after curtailment. Recall that the curtailment in the Burgos Wind project was solved end of September of 2015. Number 2 is that as for the GCGI plants, namely Palimpinong and Tongonan, their revenues increased by about 8.4% due to higher sales volume. The average tariff of the two plants increased from about 5.06 pesos per kilowatt hour to about 5.13 pesos per kilowatt hour, largely due to the escalation factor embedded into the revenue contracts. Number 3, Mindanao 1 and 2, the revenues increased by about 4%, following an increase in tariff from about 296 per kilowatt hour to about 3.09 this year. Again, considering the movement in the peso-dollar exchange rate by virtue of the formula that's stated in the contract. Fourth, the increase in revenues were offset by lower reported revenues from the plants which had significant exposure in the spot market. And these are Bacman, declining by about 26%, and Nasulo, declining by about 23%. From our newly commissioned capacities, Burgos Solar, around 6 megawatts, contributed to about 42 million increase in revenues. Slide 8 summarizes the movement of the operating expenses for the first half of 2016. In general, we note that OPEX this year decreased by about 5%, or about 443 million from the following major contributors. About 499 million purchased services and utilities, parts and supplies attributable to the deferment of activities, and lower consumption of fuel and mechanical parts for maintenance activities. And then the second one is about 197 million pertaining to business and related expenses. But these were partly offset by higher depreciation and amortization, which are non-cash, due to the capital expenditures that were put into service in the last few months. Going to the details of each unit, Slide 9 is on Unified Leyte. The revenues went up by about 18 million due to the 4% higher tariff, despite a reduction in net sales volume after eliminating the ULIPPA cost of strips. Average tariff increased to about 330 per kilowatt hour from 3.17 per kilowatt hour as a result of the movement in the peso-dollar exchange rates. Net income decreased by about 336 million, mainly due to lower insurance proceeds for the first half of 2016 versus last year. So this year we only got insurance proceeds of about 300 million versus about 700 million in the same period last year. Slide 10 is about Mindanao. Revenues increased due to the escalation of tariff, as I've mentioned in the previous slides, because of the exchange rate movements that's embedded in the revenue contracts. Net income likewise increased by about 14%, primarily due to Forex and derivative gains. Slide 11 is on Nasulo. As I've mentioned, the net income dropped to about 213 million from 430 million in compared to last year. And again, this is mainly because of the lower WESM prices, as most of its energy is sold in the spot market. Slide 12 is on Tongonan. The revenues went up by 15% due to higher sales volume, brought about by the better performance of Unit 2. Taken with lower operating and interest expense, net income improved by about 69%, or an additional 384 million. Slide 13 is on Palinpinon. Again, the better performance is because of higher volume and higher tariff, increasing the revenues from about 3.3 billion to about 3.5 billion this year. Slide 14 is Bacman. As you can imagine, as you can see there in the upper right slide, we sell about 80% of our output in Bacman to the spot market. The revenues are down by about 26% because of lower tariff, mainly in the WESM. The average tariff for Bacman is about 2.53 pesos per kilowatt hour compared to about 4.77 pesos per kilowatt hour during the same period last year. Net income also dropped by about 363 million, despite improvement in sales volume equivalent to about 280 million, and lower OPEX amounting to about 179 million pesos. On FG Hydro on slide 15, the revenues increased to 1.5 billion from about 1.2 billion in the same period last year. The net income also increased by about 268 million due to 30% increase in volume amounting to about 359 million and lower operating expenses amounting to 23 million. The increase in volume is brought about by higher water levels and higher water discharge from NIA. There's a slight increase in prices for contracted energy and spot market, but these were offset by lower prices for ancillary services. Slide 16 is on Burgos. Revenues increased by about 118 million as a result of the uncurtailed output in the first half of 2016. The net income increase of about 12 million was due to higher revenues and forex gains, but this is weighed down by higher OPEX, mainly due to higher depreciation of our property, plant, and equipment, and power plant O&M with Vestas, because part of it is variable on a variable fee basis, as well as higher real property taxes and insurance premium. Slide 17 is on solar. Revenues amounted to about 49 million following the declaration of commercial operations of Burgos Solar 2. Finally, on the ULGI, on slide 18, the revenues decreased by about 10 million due to lower average tariff from 4.32 pesos per kilowatt hour last year to about 3.97 pesos per kilowatt hour this year. The decline in revenue and higher OPEX resulted about 169 million pesos of net loss for the ULGI IPPA strip. Slide 19 on the RNI. Consolidated recurring net income increased by about 5% or about 231 million from last year. The movement mainly is due to the following: higher income from Palinpinon Tongonan of about 665 million. Higher income also of FG Hydro, about 267 million. But these were offset by lower income from the plants that are selling or exposed to the spot market, namely Nasulo and Bacman, despite their lower operating expenses. Slide 20 is on the cash flows. Cash generated from operations during the first half of the year stood at about 8.2 billion. And the cash generated were used primarily for debt service requirement and maintenance capex. Slide 21 is on the ratios. Current ratio was lower due to the higher current liabilities, mainly because of the reclassification of the 3.5 billion peso bond, which will mature by December of this year. The DE improved due to higher equity increase than the higher debt balance, brought about by the 5 billion BGI loan. Meanwhile, the net debt to EBITDA improved due to higher EBITDA increase of about 9% versus the 4% increase in debt. I'll now turn you over to Irene Itoses, who will be providing for a short update on some of the major maintenance retrofit initiatives for Tongonan, Mindanao, and Upper Mahiao for 2016.
Thank you, Erwin. EDC remains committed to address fleet-wide plant resiliency and reliability issues. For Bacman 3, the unit is operating normally following the warranty inspection in February 2016. On improving fleet-wide equipment reliability, one notes that on order long lead time items are in varying stages of the supply chain. For Upper Mahiao, installation of the first of two rotors on order and a diaphragm is ongoing with a targeted end August 2016 completion date. A second rotor is currently being manufactured in the US, the installation of which has been programmed for January 2017. For the Tongonan Unit 1, all retrofit components and materials are already on site. Plant shutdown is to coincide with the control system integration project scheduled for October 2016. Program for the succeeding units are as indicated, or Q1 and Q2 2017 for the second and third units respectively. For Mindanao 1, the replacement generator stator is already in transit from the U.S. to the project site. Stator replacement is to coincide with the planned major maintenance outage of the steam turbine this October 2016. I may now turn over the floor to Kenneth to discuss the development in the electricity power industry, together with a view as to how they affect EDC's operations.
Thank you, Irene. On slide 24, after the passage of EPIRA and the RE law, new markets have already been created to improve the matching of what suppliers can offer and what the customers needed. Prior to EPIRA, profitability in the power industry only depended on selling power to either government or large distribution utilities. Again, prior to EPIRA, there was no recognition or reflection of the true cost of power, nor was there any concept of sustainable energy development prior to the RE law. There are now 5 markets or customer segments which EDC serves. Yes, competition continues to remain tight due to global commodity prices, lowering benchmark prices, but the operations of these markets in the country point to a lot of opportunities for generation companies like EDC. There is more space for improved offerings and better matching of supply and demand. If we were to rank the priorities of EDC in terms of serving these customer segments, contracting either through distribution utilities and electric cooperatives is still there as the top priority. However, with EPIRA mandating retail competition and open access, it can be said that the best match for our geothermals would be the contestable market, where the preference for RE power from companies with aligned sustainability commitments is starting to open up in the country. While the RE law opened up the FIT-based market and the distributed generation segment for our solar and wind projects, EPIRA opened up other markets which were limited to NPC before, particularly the ancillary service markets where location-specific needs for securing the grid is being served. This fits our geothermal as well as our hydro projects. If we do not become competitive, our capacities still get to sell its power into the WESM and serve the uncontracted portion of the market. Slide 25. With the critical issuances from the DOE and ERC mentioned in the previous slide, generators and or suppliers are already shifting their focus to serving the contestable market. While competition still happens on cost basis, other areas for differentiation have opened up. The issuances from ERC also levels the playing field, given restrictions on the incumbent distribution utilities to participate in that market. Resistance from Meralco and incumbent DUs is expected, but the benefits of the retail competition and open access to customers adds pressure to the ERC to implement it. This is our last slide, and I will now turn you to Mr. Boy Resio, who will moderate the question and answer session.
Okay, operator, we can now open the Q&A session from among those who have dialed in. Thank you.
Thank you, sir. The question and answer session will be conducted electronically. If you would like to ask a question, please do so by pressing *1 on your touchtone telephone. If you are using a speakerphone, please be sure your mute function is turned off to allow your signal to reach our equipment. Once again, please press *1 on your telephone to ask a question. If you wish to cancel your request, please press *2. We will now pause for a moment to assemble a queue. Our first question comes from the line of Ajay Mirchandani from JP Morgan. Your line is open. Please go ahead.
Yes, thank you. Thank you so much for the time for the earnings presentation today. 3 questions from me. The first one was on the Bachmann proposed contract with Meralco. Is that Any update on that, or is that effectively off the table and we are now seeing EDC looking to kind of lock in alternative contracts? Any update on that would be helpful. Number two, on the ULGI strips, can I confirm the reason for the higher OPEX? Was not too clear what was the reason for the higher OPEX for the strips. And thirdly and lastly, as you'd be well aware, Chevron's been talking about selling a number of assets in the region, including its geothermal assets. Is that something we could see EDC potentially move forward in any which ways? Thanks a lot.
This is Kenneth Balabo. For the first question on Bachmann's contract with Meralco, there's no specific discussion between BGI and Meralco on whether or not this will no longer push through, but Bachmann is already considering it as off the table and are already actively seeking customers in replacement for that contract.
And any timeline on an anticipated contract, given how long it's been off contract?
We are targeting 100% contracted Bachmann by end of this year.
Yeah, on question number 2 for ULGI strip, higher OPEX is driven mainly by the purchase price that ULGI is paying to NPC. Today, we are paying at about 5.40 peso per kilowatt hour as compared to the sale amount of 2.99 peso per kilowatt hour.
Sorry, can you just repeat the numbers again?
Yeah, operating expenses is higher, driven mainly by the purchase price that ULGI is paying to NPC, PISAM, which is about 5.40 per kilowatt hour. That's actually the driver. The cost.
I didn't actually get the increase in the OPEX number, and I'm just trying to understand. Given the fact that you have a kind of locked-in payment, should we expect that kind of increase in your OPEX over the life of the strip?
Yeah, the way it works, AJ, is as you can see in the UL Unified Data Plans, no, our tariff increased this year versus last year. And the way it works also with the ULI PPA strip is that the same formulation is embedded in the contract with NPC. So that's the reason why the cost of the kilowatt hours that we are paying NPC is also increasing because
it is in line with the pricing movement on ULGI.
That's correct. That's right. Yep. And then on item 3, we are always on the lookout for M&A opportunities in the renewable energy space, whether it's geothermal, wind, hydro, or solar. So we have been looking and continue to look for these opportunities.
Okay, thank you.
Ladies and gentlemen, once again, if you would like to ask a question, please press star 1 on your telephone at this time. We will now move to our next question from the line of Jeremy Yumul from RCBC Securities. Your line is open. Please go ahead.
Hi, we just like to confirm that Burgos Wind posted a net loss, and if it did post a net loss, could you delve into the details? I'm trying to understand how a FIT plant could post a net loss. Thanks.
Yeah, on Burgos net loss, it's actually driven mainly by the interest expense that was recognized for the period. In addition to the interest expense, O&M is also higher, driven by higher volume because there's a component in the O&M that is actually driven by variable increases.
Sorry, if I may also add, the major reason behind that is because I think for the first half of this year, we were experiencing lesser kilowatt hours, lesser wind in Burgos, because I think we came from an El Nino year, and that's why the wind that we've experienced so far in that part of the country is actually below the P50, the 50% probability for wind. I think right now, at least for the first half of the year, there were months that we were tracking the P90, more the P90 versus the P50. So that's the reason why we registered the net loss for the first half for Burgos.
All right, thank you very much for the clarification.
Ladies and gentlemen, just a reminder, if you would like to ask a question, please press star 1 on your touchtone telephone at this time. We will now pause for a moment to assemble a queue. Once again, we have Mr. Ajay Michandani from JP Morgan. Please go ahead, sir.
Yep, thanks. Owen, just to follow up specifically on Bachmann, when the anticipation is for 100% contracting by year end, can you give us a bit of sense on the likely confidence level of doing that? And secondly, what's the kind of pricing we should expect that to potentially be in the range of?
Okay. AJ, we'll ask our marketing team to actually respond to your question. Give us a minute.
Hi, on the question on Bachmann, we already signed 1, 2, 3, 4, 5, roughly around 5 contracts, which will start later the fourth quarter of the year. In terms of completing them, I think we just need to construct roughly around 50 megawatts left, which we are targeting with the contestable customers.
Sorry, just to clarify, so of the total capacity of Bachmann today, how much is effectively contracted and likely to be contracted by year end, and what will be pending? Sorry, I didn't get those numbers.
Okay, let me just get that. Hi, in terms of what is contracted today, we have roughly around 37 megawatts out of 130. Contracted, PSA. Yeah. Okay. When the new signed contracts gets effective in fourth quarter of this year, it will go up to 90 megawatts contracted. So all in all, we still have to find a home for the remaining 40.
And can I just confirm the likely pricing for this 90 megawatts?
We're looking at because these are different contracts, and we're mostly looking at the contestable customers. We have a range of around 380 to 410.
380 to 410. Okay, thank you.
Our next question comes from the line of German Delpal from Abacus Securities. Your line is open. Please go ahead.
Hi, hello. I just want to ask about the retrofitting. When it happens, how many months will it take? Like the maintenance shutdown? How long will it take to accommodate the retrofitting? Thank you. For Tonganan, that's for Tonganan.
Yeah, for Tonganan, Unit 1 will be retrofitted fourth quarter of this year. That will take about 58 days. Unit 3 by March 22 next year. That will take about 54 days. While Tonganan Unit 2 will be July 16, and that's 54 days now. So roughly about 2 months for each unit that will be retrofitted and will be scattered between the fourth quarter of this year until second and third quarter of next year.
Erwin, let me just correct the Unit 2. Unit 2 would be around January, actually.
Sorry.
So January 2017.
Okay.
That's the second.
Okay, so Unit 1 is 58, Unit 2 is 54, and then 54?
Yeah.
Okay. I have another question. For the installation of the new rotors, do we need a maintenance shutdown for that? For Upper Mahio?
We will require a shutdown.
How long will it take to completely install the new rotors?
Normally, it takes around 25 days to replace the rotor, and that's true for unit number 1, which we will do on January 2007.
Okay, thank you.
Once again, if you would like to ask a question, please press star 1 on your touchtone telephone at this time. We have a question from Carissa Macbayo from Macquarie. Your line is open. Please go ahead.
Hi, thank you for the call. Just wanted to ask if you already have an RES license in place.
Good afternoon. Currently, the way we approach the market is that we have first-gen energy solutions as the retail electricity supplier. The main reason for that is that, if you recall, a year ago, there was an ERC issuance which prevented each generation company to put up their own or to get their own RES license. Since then, I think a few months ago, ERC issued a new rule, a new set of rules that now allows generation companies to have their own RES license. So we are now in the process of getting a license for each of our generation companies.
When do you expect that?
The application process usually takes 3 to 4 months, depending on the requirements that they require from us. But in the past, first generation solutions required 3 to 4 months to get a new license.
So it's likely that you'll be able to get the licenses within the year.
Yes. Yes. There's really no restriction on getting a license, except for the regulatory issue last year. But that has since been removed.
Okay. Thank you.
Once again, we have Mr. Ajay Machandani from JP Morgan. Go ahead, sir.
Sorry about this, but just to clarify, when you were saying there was a restriction on EDC getting a RES license last year, sorry, I kind of couldn't hear the answer too well. If you could just help explain that again, please.
Yes, the restriction wasn't specifically on EDC. It was on the whole generation sector. The draft rules under Resolution 22, series of 2015, prevented all generation companies from putting up their own, what they call Genco RES. So now that was already changed.
So just to clarify, last year when these restrictions were in place, this was across all generation companies across the board.
Correct.
So if effectively no generation company last year effectively had that, and that's obviously now with open access and the retail competition that changes. Okay, fair enough. Okay, I understand. Because my impression always was that generation companies were always allowed on the RES side. I'm just still struggling to understand why that restriction was in place, given the fact that you would have always had some kind of sale to consumers directly. I would have assumed that you would have required a RES anyways for that. So was that previously done in-house?
No.
Again, I'm not sure about EDC specifically, but more generally from a market standpoint.
So again, if you take it further down the road, the initial design was that generation companies were allowed to have their own RES. However, after the new set of ERC commissioners were put in place, they had an interim rule that, the main reason for that was the commission, the Energy Regulatory Commission, wanted to give others a chance, essentially so that Gencos will not dominate the supply side. Of course, there were a lot of opposition to that because it was not consistent with the law. And so after a series of public hearings, that was changed.
Okay, so the fact that Aboitiz power used to be in RES previously was not through its Genco arm, you're saying?
Yeah. So before they had, for example, SN Aboitiz had their own RES. After the resolution came out, their license were in danger of not getting renewed.
Okay, understand. Anyways, thank you.
Okay.
Ladies and gentlemen, once again, if you would like to ask a question, please press star 1 on your touchtone telephone at this time. Once again, we have another question from German Delpa from Abacus Securities. Please go ahead.
Okay. Hello. Good afternoon. I just want to ask about Palimpinon. I understand that you're trying to expand installed capacity by 20 megawatts. May I just ask when do we expect it to go online, and did you already acquire an ECC for that? Thank you.
Yeah, on Palimpinon, it's still in the works right now. We do have one of our units, Nasuhi, which is on preservation mode. That's the one that we put offline because of Nasulok, which is operating at 40 megawatts right now. But as of the moment, I think the next plans are to drill additional wells to actually supply 20 megawatts to that unit. But in order to do that, we need to secure or expand the capacities under our ECC. So that's also under works right now. There's no definite timetable as of the moment. All the pre-work are being done, but we'll only know the final timetable once we're able to secure the amendment to the ECC and are able to start drilling additional wells for this unit.
Sorry, I just want to clarify. When do you start to drill new wells again?
So we still need to increase or amend the ECC first in order for us to actually. Okay. So as soon as we get the amendment, we'll draw up the timeline for the drilling of the well and putting the unit online again.
Okay, thank you.
Once again, if you would like to ask a question, please press star 1 on your touchtone telephone at this time. It appears there are no further questions. Please go ahead, sir.
Okay. My understanding is that there are no other questions from among those who have dialed in today. I would like to take this opportunity to thank everyone participating in today's call. Thank you very much. Good afternoon.
This concludes today's conference call. Thank you everyone for your participation.